Hi, this is Joseph. It's January 31st. We're looking at the dollar yen. Dollar yen daily time frame. This is a daily chart. So I'm going to break down this accumulation. We actually had a breakout 3 trading days ago on this down trend line. Again, as I say often, just the simple fact that price is breaking through a trend line is not the basis for entering a trade. I see a lot of people make that mistake. I used to make that mistake. I still see people talk about it on YouTube videos. They're teaching people how to trade when price breaks a trend line. And you got to be really careful because sometimes it works and sometimes it doesn't. You've got to be specific. It's sort of like, if I was to compare it to when I first started trading, I would trade candlestick patterns everywhere. I would trade evening stars, morning stars, bullish and bearish engulfing candles in the middle of consolidation, and I would get stopped out. I would see a bullish candle like this, and I would go long thinking it's going to go back up here to resistance, and it would turn around and stop me out. And then I would short it, and then it would turn around and stop me out again. And you got to be really specific about where you use candlestick patterns. So again, we saw the trend line break, and that is not the basis for this entry. This, what you see right here where I'm moving my cursor, this is what set up this entire process. So what we're doing is looking for better trade opportunities. We're probably going to have fewer, right? We're not scalping here. We're going to have fewer trades, but our trades are going to work. They're going to work, and we're going to use the point and figure to determine our take profit level based on the time frame that we're trading, and we want to trade with the smart money alongside with them. We don't want to be on the wrong side of that. And it's the smart money that causes price to move in the way that you see here on the chart. For example, you see this move to the downside. A lot of people, inexperienced, the people who do not understand what I'm about to share with you, inexperienced traders, when they see price taking out a low, they sell. And that's a trap, right? We see it reverse and goes back up inside a consolidation. And it does it again. It doesn't go very far. So it's another trap. They start thinking, okay, well, they tried to short it here. It didn't work. They got stopped out. Maybe this time it's coming back down. There may be more volume on this move here where you see the word spring, and so it takes out that low just a little bit lower, and they start thinking, well, look at this, it's made a low here, made a low here, maybe this is it, and now this downtrend is going to resume. So they pile in again, and they try it again, and over and over and over they try because they don't understand these concepts, and they get stopped out over and over again. I was one of those people. I used to do this all of the time. You have to have this skill. You have to understand, in my opinion, before anybody even puts an indicator on a chart, they should understand these concepts before they move on. That's what my trading course does. It moves people through Module 1, Module 2, Module 3, and 4 so that they can get these, from the beginning to the advanced stages of being able to execute these trades, not only with what you see here on the candlestick chart, but bar charts as well. I prefer bar charts. But understanding this structure, being able to track smart money, trade alongside with smart money, and then finding your trades, pinpoint your entry, and find your targets with point and figure. It really isn't that complicated. It's just a different way than what most people do when they get into this business. I know because I made that same mistake. So what we're doing here is identifying a selling climax. And then there's usually an automatic rally. If everything works as we expect it to, this is exactly what unfolds. We have phase A, which marks, again, our secondary test of that support low. It doesn't have to test it on the number. This is fine. This is exactly what it does. And then it resumes and goes back in and starts to find that balance where price starts to move around and filling out sideways this consolidation phase. This is phase B. This is where I usually stay away from trading. I don't want to trade in phase B. When I see this kind of behavior right here, I know that we are in phase A and I'm looking for phase B. And at that point, I leave it alone. So smart money is accumulating shares at these lows. Right away, as you're tracking this behavior, you're thinking to yourself, smart money, you need to leave it alone. You need to not jump in and out and try to trade all of this. You need to leave them alone, but follow them and track their behavior so that you can confirm what's about to unfold next, which would be a reversal and a markup, right? They've got a campaign. They've got an agenda. They're going to be taking price to a certain level. And that is what we need to calculate. I'm going to tighten up my charts and we can take a look at that in just a moment. But that's what we're looking for. We want to confirm that it's smart money that's actually moving this around, moving price around. And then we get a final test, which usually, again, in schematic number 1, would be or would result in what appears to look like, let me go ahead and pull this out of the way, a spring. Springs or shakeouts would occur late in the trading range. This could have taken longer. However long that takes, I leave it alone and I wait for the confirmation of this behavior. That confirms to me that smart money at this point is testing, and they're checking throughout phase B. This is the building of this cause or this campaign that smart money is creating to take it to higher levels. That's exactly what we're looking at. Smart money institutions, large professional interests. Everybody, uses a different phrase to label smart money. So again, they're accumulating shares at the lows. We can see that with, let's say, an increase or a decrease in volume. Sometimes that's going to give us some divergence, show us some turning points. Phase C is where we go through a decisive test of these support lows, and it creates a spring in this example, schematic number 1. Remember, in schematic number 2, we don't have a spring. Generally, it would stay confined and above that support low from the selling climax in schematic number 2. Not perfectly. Sometimes you get a little dip that will go through it like that, but for the most part, it's the structure that we're looking for. This is a clear spring. So this is the way that smart money is able to ascertain whether this stock, or whatever it is that we're trading here, is ready to be marked up. And what I'm doing is I'm finding springs, but then I'm getting in with point and figure. Had I not seen the spring, it would have been, let's say, schematic number 2, and it would have been a different type of trade, and I perhaps would have waited until the actual breakout, and then the pullback, and then the bounce. So there's 2 different ways to approach it. Again, with the spring, it's much more obvious, and I can get in with my point and figure. Without the spring, where the testing is much more structured and contained within these boundaries of support and resistance, then I would probably wait somewhere in phase D on these pullbacks or these tests, or the actual breakout, and then it would pull back. Let me show you what that would look like. So what we're anticipating at this point, again, a breakout above the automatic reaction, because here we had our selling climax. There's our automatic reaction. Price could potentially break out, pull back down, and you'll notice, again, go to the live coaching call section of the modules in the membership site, and you'll see example after example after example, and it's just picture perfect. When I use the phrase or the term picture perfect, those are the ones you want. Those are the trades you're looking for. I'm always looking for picture perfect trades, and I do not hesitate, and I do not doubt them when I see them. I know that sometimes people will sit back and they'll look at their trades and go, that's just too perfect. That doesn't even make any sense. Those are the trades that work out, because everything is in alignment. And again, this same structure, everything that I'm talking about here, applies to any time frame. You can do it on a 5-minute chart. You can do it on a 1-hour chart. Test it, practice it. But it's very, very effective for investors or swing traders who have a limited amount of time. You need to learn these concepts. Once you understand these concepts, and it's not going to take that long, once you learn these concepts, you can immediately apply it to anything that you're trading, and everything is going to be clear. No more guessing. You're going to know how long to hold on to your trades. You're going to find bigger trades that will produce bigger profits. You're going to be able to get into trades that are 2 for 1, 3 for 1, or greater. Very often I see traders, when they're scalping, their trades are not 1 for 1. Very often it's a lot less than that, and their risk is much larger than their reward. If you're still trading like that, you have to learn these concepts. This is where you need to start. Again, we're not throwing in a bunch of indicators. All we're doing is looking at price action, the supply and demand, that constant struggle, identifying the phases, which allows us to track the smart money behavior. And then we throw in some volume. You see me use volume. That's the only other indicator that I would apply. So the structure goes, when you join the coaching program, you're going to learn how to read the chart without any indicators. And then we're going to move on. Once you've been able to do that, we're going to move on to volume. And then we're going to use volume to track the waves as well, so that you can also identify these turning points. From there, you're going to learn point and figure. Point and figure is easy to do. And then you're going to be able to identify the entry, which is then going to give you a target, so that you're not holding onto the trade too long, but you can stay in these bigger trending moves, and you can ride it right alongside with smart money. We do not want to get in right here and jump in because we think it might take out the high. Don't do that. That's chasing a trade. That's a big mistake. Don't do that, because we could have a pretty significant pullback. We could see another test of this level right here, which was from January 21st. That wouldn't be out of the question, and then see it bounce and go back up again. So keep in mind, you've got to be really particular about your entries. With our targets with point and figure, we have a conservative first target, And then we have an overall target, the final target, which would be the second target. You see on some of my charts I have 1T, that's the first target, 2T is the second target. And we're going to track smart money along the way. We're going to trade with them. They have an agenda. They want to take price to these higher levels. If that continues, if our expectations are accurate, we're going to be able to see this